It's time!
Are the financial markets about to fall off a cliff? Is everything about to crash and burn even worse than 2008? Financial institutions going under, bailouts, recession, or even a greater depression? The guy who called the last bubble in 2008, Michael Burry, is going short across the board. Does he know something we don't? We'll find out in about 10 minutes because it's time for Chico Crypto. Michael Burry went short on the housing markets from 2005 to 2008. And even though people thought he was crazy to short the solid investment of housing, he was correct. Back then, using leverage and credit default swaps, his total bet against the housing market and the financial companies working with subprime mortgages came in at about $8.4 billion notional value.
We bought basically short $8.4 billion of credit default swaps related to mortgages or financial companies.
Now, this earned him personally over $100 million, and for the investors in his firm, an even cooler over $700 million.
Made a ton of money, much more than I ever imagined.
So what is old Michael up to today? Well, he is back with another big short. From this Livewire Markets article, Michael Burry puts out another big short. We can see it says, Michael Burry has U.S. equity markets in his crosshairs. Burry has two active put positions on two ETFs that track the S&P 500 and the Nasdaq 100. Combined, the options have a notional value of US $1.6 billion. Now, this isn't $1.6 billion invested by Michael. He bought put options, which allow an investor with limited amounts of capital to earn big if they are right. In the 13F filings, it's underlying shares associated with the puts that are reported, along with the notional value of those shares. The actual cost of these puts was likely in the ballpark of 10 to 50 million. Burry is short on the traditional stock market, the thing people think of when they hear stocks, the big boys. And he has been tweeting about this even before he made these massive short positions. In March of this year, Q1, before these put options were exercised at the end of Q2, Burry tweeted, "It's possible today we found our ENRON." Yeah, ENRON, the company that shook the financial markets in the early 2000s when the stock went from $90.75 per share in the year 2000, then plummeted to less than $1 by the end of November 2001. It was the precursor to the 2008 financial collapse. Although he knows what is going to happen if there is this decade's ENRON sitting in the S&P 500 or Nasdaq 100. He tweeted this just after, also in March. 2000, 2008, 2023. It is always the same. People full of hubris and greed take stupid risks and fail. Money is then printed because it works so well. Even if there is an ENRON, the mother of all crashes where everything turns to dust isn't coming because our government will just do what they've been doing for decades. Print money and save the important companies, the ones that are crucial to the health of the US economy. So guess what? Michael isn't fully short because of this. He's actually been adding buys and longs to his portfolio too in Q2 of this year. Here is a list of those. He is bullish on bulk shipping companies, oil and gas companies, prisons, banks, media companies, and some tech companies. So he thinks many of the top companies in the S&P and Nasdaq 100 are overvalued, and we'll see a major correction soon because there may be an Enron type situation on the horizon. But he still sees values in the markets, as the mother of all crashes will be delayed once again because the money printer will go. But who is the Enron? Well, another famed investor and short seller, Jen Chanos, who predicted the Enron crash, is raising funds in mid-2022 to begin shorting something. U.S.-listed real estate investment trusts, REITs. Where in the real estate market? Well, not in residential like in 2008, but in the commercial real estate sector. Brett Johnson on Seeking Alpha has a great article titled Commercial Real Estate, the New Potential Subprime. And he says, I will be watching two key sectors of the markets to see how all this plays out. The first is large REITs with major exposure to office properties in major cities. Two of those are Vornado Realty Trust and SL Green Realty Corp., two of the largest owners of office properties in NYC, New York City. How have these two been performing? Extremely bad. From an SL Green investor update, they say, SL Green Realty Corp. Today reported net loss attributes to common stockholders for the quarter ended June 30, 2023 of $360.2 million, or $5.63 per share, as compared to net loss of $43.9 million or 70 cents per share for the same quarter in 2022. Net loss attributable to common stockholders for the second quarter of 2023 included $350 million or $5.08 per share of net losses from the sale of real estate interests and non-cash fair value adjustments, as compared to $70.7 million or $1.02 per share of net losses for the same period in 2022. Finally, there is this article from Fox Business titled Commercial Property Debt Creates More Bank Worries. And the article says, a record amount of commercial mortgages expiring in 2023 is set to test the financial health of small and regional banks already under pressure, following the recent failures of Silicon Valley Bank and Signature Bank. Smaller banks hold around $2.3 trillion in commercial real estate debt, including rental apartment mortgages, according to analysis from data firm Trepp Inc. That is almost 80% of commercial mortgages held by all banks. Banks are not able to collect their debts from commercial real estate borrowers. A large number of defaults could force banks to mark down the value of these and other loans, aka move these loans into the subprime category. They aren't prime. They likely never were.
Subprime shit.
It could have been banks or the REITs like SL Green who issued the mortgages. After issuing the mortgages, they packed and sold it as part of a mortgage-backed security portfolio to investors, such as other banks, to pension funds, hedge funds, or other types of financial institutions. Therefore, a commercial real estate crisis would spread throughout the financial world. Could SL Green, who is in the S&P 500, be this decade's Enron, the one Mike said he may have found? Well, it doesn't really matter. Like Mike said, the government will just print more money to save the sector. And if they do go bankrupt, it will be bought up by JP Morgan, with money the US government gave them. But what are Michael's thoughts on crypto? You have to research to find this, due to him deleting his tweets on X every so often. Now, he has been going back and forth for some time on bearish versus bullish on crypto. February of 2021, Burry tweeted this: I don't hate BTC. However, in my view, the long-term future is tenuous for decentralized crypto in a world of legally violent, heartless, centralized governments with lifeblood interests and monopolies on currencies. In the short run, anything is possible. Why I am not short on Bitcoin. June of the same year, he tweeted, the problem with crypto, as in most things, is the leverage. If you don't know how much leverage is in crypto, you don't know anything about crypto, no matter how much you think you know. Which he isn't wrong about that. There is a ton of leverage in crypto across the board. But then he followed this up with this: all hype and speculation is doing drawing in retail before the mother of all crashes. FOMO parabolas don't resolve sideways. When crypto crashes from trillions or meme stocks fall from tens of billions, Main Street losses will approach the size of countries. So, did he stick to his guns and short crypto or Bitcoin? Of course he didn't, because in October, just a few short months after this June 2021 tweet, he said in response to people calling him out, okay, I haven't done this before. How do you short cryptocurrency? Do you have to secure a borrow? Is there a short rebate? Can the position be squeezed and called in? In such volatile situations, I tend to think it's best not to short, but I'm thinking out loud here. Burry was scared to short crypto because of the volatility. He was scared of getting liquidated. Well, he should have listened to his gut. He tweeted about this learning to short crypto October 14th. As we can see from the BTC price, it was at around $57,000. Less than a month later, BTC hit its peak November 10th. And after that, it was down, baby, down. This was a good call by Burry, although he wasn't completely right. He said crypto would crash, which it did, but he said it would crash from the trillions, like out of the trillions. As we can see from the current market cap, it fell from 3 trillion to 1 trillion. But crypto has held the $1 trillion total market cap throughout this bear. The only thing that is going to take down crypto any further is a market-wide crash that many are predicting. But that would only be a short-term crash because the government will just print more and more, delaying the inevitable once again, but strengthening Bitcoin's use case. Cheers, viewers. I'll see you next time.
The most trustless name in news.